Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec on Monday the 24th of February. There's been a significant safe haven shift once more. Over the weekend we've seen that the coronavirus, or COVID-19 as they're now referring to it as, is now changing, and the virus is going international, and that is a real concern for markets. Previously it had been broadly confined to the Chinese mainland, but that seems to no longer be the case, with significant increases in number of cases and also deaths being seen through South Korea, through Iran, and also in Europe, in Italy. This is a real concern for the European economy. That's why we're seeing the DAX quite strongly lower today. But also other markets today, such as the CAC and the FTSE, also lower. And the impact of the coronavirus seems to be sort of changing in terms of how the market is viewing it, from the short-term knee-jerk reaction to the number of cases in China. Now they're looking past that as the cases and death rate is starting to sort of level off more or less, but now, seeing as it's gone international, it's going to be really impacting on economic growth, because you've already seen announcements that travel, for example, between Austria and Italy is being restricted. You've got the reaction across the supply lines of how companies can source their goods is also going to be impacted. So economic growth figures are seriously going to be hit by this, and we're seeing that yields on bonds are significantly falling. We've got the 10-year Treasury yield falling at almost 3.5-year lows. You've got the 2-year also falling sharply, and this is now seeing a significant flattening of yield curves as spreads, well, between the 3-month and 10-year Treasury spread, that's significantly turning negative now, but also you're seeing the 2s10 spread at levels not seen since October. So these bond markets are really sort of pricing in the economic impact of this COVID-19 now. So really significant moves as equities fall. Safe haven plays are really benefiting. That gold price has shot higher in recent days. It's another 2% higher today, as it sort of looks towards $1,700. Well, that's a significant rise, obviously, as we can see there. The dollar had been starting to slip back end of last week, but it's started to edge back higher again, and this is coming as the yuan is back above 7 against the dollar, and in terms of weakening, that is, and the oil price is sharply falling away, as I said, as growth expectations start to be hit again. So there is a real shift out of anything growth orientated and more towards your safe haven plays. In terms of data points today, we're not really seeing anything that is going to change the outlook. We've had initially this morning the German IFO data, which actually fared pretty well. The business climate picking up better than expected, actually 96.1, and you can see here on the chart that it's effectively just a stabilisation. But whether COVID-19 and the coronavirus really does start to hit German growth, that is the key factor there for that data going forward. Nothing else really on the agenda after that today, apart from Loretta Mester, who's a pretty hawkish member of the FOMC, so maybe something to look out for this evening at 8 o'clock UK time. Now, in terms of our charts of the day, we've got Euro Yen, which the yen came under really significant selling pressure last week as the market started to fear that Japan was next to be hit by the economic decline from the coronavirus. But it's interesting that there's been a shift back into the yen today, and that has really dragged Euro Yen back lower. Euro Yen playing around with this pivot area between 120.75, 121.45. If I blow it out here, you can see that the numerous turning points, the numerous rebounds initially, and subsequent resistance levels. So big pivot area there over the last sort of 6 to 9 months on the Euro Yen, and the fact that it rallied into that resistance and is now falling back again, that doesn't bode especially well, considering the RSI is back around that 50 point, having turned lower. Are the stochastics rolling over? Are the MACD lines already faltering in their recovery? So this is a key pivot area, key turning point on euro yen, and the fact that euro yen has stuttered on Friday and started to come back lower again today is a significant sort of fear that the selling pressure may start to come back in again. You can see here on the hourly chart, momentum indicators had been moderating into the close on Friday, but starting to now fall away again as the euro yen has started to drop back. 120 big figure to 120, sort of 120.40 area is again a supportive pivot on the hourly chart. If I zoom out here, you can see that it's a basis of support. It's not to the pip though, but I think if anything, with a 119 handle on euro yen, you'd start to factor in this market falling over, because that would be back around sort of 2 to 3 day lows, and it would be certainly suggesting that the rally had fallen over. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.